Hello and welcome to Smaulgld's People's Bank of China's update on their gold reserves for the month of May 2017. Thanks for joining me. I hope you'll stay for the whole portion or the whole YouTube that I'm going to do today. There's a lot of information here that will change your perception of what has been happening in China, and it's not intended to change your perception based on my opinion. I'm going to show you what is happening in China, and it goes against the narrative that has been thrown out there that China is dumping treasuries, acquiring gold, and the dollar's days are over, collapse is coming. Let's go through what's going on according to reported information at the People's Bank of China. China boosts U.S. Treasury holdings, halts gold purchases. Okay. People's Bank of China added no gold to her reserves in May, and the People's Bank of China's U.S. Treasury holdings are on the rise again. Total reported People's Bank of China gold reserves stand at 1,842.6 tons, the same as October 2016. People's Bank of China's foreign reserves have grown now for the fourth straight month, and they're well over $3 trillion. They had dipped slightly below $3 trillion earlier in the year, but the People's Bank of China had been selling reserves to defend the yuan. The yuan had dropped about 6.5%, but now they're in a position to start rebuilding their reserves, and they are rebuilding them with U.S. Treasuries, not gold. Now, you'll say, well, they're lying. We're going to get to that. There's plenty of gold in China. We're talking about the People's Bank of China. Just hold that thought. So, as I mentioned, the People's Bank of China's foreign reserves fell approximately $320 billion in 2016 and $513 billion in 2015. And the People's Bank of China was adding a lot of gold to their reserves in 2015. They reported 104 tons. And last year, 60 tons. So far this year, zip. No gold added to reserves. But gold demand in China is very strong. Imports are seen surging. There's your distinction between China, the country, and the People's Bank of China, the central bank of China. Now, I put the headline, China boosts its U.S. Treasuries, just because that's what people call the People's Bank of China. It's wrong. People's Bank of China is the central bank of China. China is the country. Sounds simple, but people inevitably use them interchangeably, and it's not correct. There's plenty of gold demand in China. There's plenty of gold in China. No one's denying that. We're talking about the People's Bank of China. Remember, it's the People's Bank of China that does the, quote, dumping of treasuries, not China. People in the country aren't dumping treasuries. It's what's being held at the People's Bank of China, and that number is over $1 trillion. Let's keep those two straight, and we're going to go through a few more things here. Now, you can donate to Smaulgld. I wish you would. You can donate to Smaulgld via PayPal. You can donate via Bitcoin, or you can become a patron. All the links are below, or they're on the website. Also, please go to the website and look. I'll leave a link below and check out the charts. You can see them a lot better than, and you can kind of open a different browser and follow along with me. We can look at the charts together. All right. So here you can see I don't even bother updating the chart anymore because they're not adding. They're still at 1842, and you can see they've been at 1842 tons, People's Bank of China, since October. So there's little adjustments here, but if I were to fill it in for May, they'd be at 1842. This other chart here shows you how they were on an upward trajectory, the People's Bank of China, in adding gold, but they've since stopped. All right. Now, for all of you people who say China's underreporting, I know you hear this, you listen to alternative financial media, Jim Rickers, they're lying. No one's lying. Well, maybe they are, but that's not the point. The point is China has plenty of gold. No one is denying that. They're not underreporting it. That's just what's on the People's Bank of China's balance sheet. Now, I wrote an article called The Case of China's Missing Gold. It was republished in Zero Hedge, and it outlines where all that missing gold is. It's at sovereign wealth funds. It's at other banks that are owned fully or partially by the People's Bank of China. It's other regional banks. There's plenty of gold in China. And I also found an article that said China's president confirms practice of moving official reserve assets to other entities in China. So clearly all the gold is not at the People's Bank of China. But now we're going to get into some interesting, which is the interesting point here is, excuse me, is the buying of U.S. Treasuries, because that's the other narrative. China's buying gold, or People's Bank of China is what they mean when they say China, hand over fist, and they're dumping treasuries. Not true. Was true. Not true anymore. Let's look. So the People's Bank of China this year, in January, had dropped their foreign reserves under $3 trillion. Part of their dumping of treasuries was they were selling foreign reserves along with other foreign reserves in order to support the yuan. Well, that's not happening anymore. They are now adding back their reserves, and a good portion of those are in U.S. Treasuries. I have a chart below, and I predicted this would happen. We're going to get to that in a second. But the chart that I'm going to show you only goes through March, because that's how the U.S. Treasury reports its holdings. But we've seen what's happened in April and May. They've increased their foreign reserve $20 billion in April, $24 billion in May, and I can almost guarantee that a good portion of that $44 billion added to reserves is also going to be U.S. Treasuries. So we're going to see U.S. Treasuries rise above 1.1 trillion held by the People's Bank of China. Here's the chart I was telling you about right here. There was the low point, and I tie this into China's own internal, People's Bank of China's own internal needs. I tie it into the fact that the Fed has been raising interest rates as I predicted they would, in part because of this reason, that they need to put Treasury bonds on sale by raising rates and to make them more attractive. And that's one of the main reasons I said back in 2015, when everyone was saying they'll never raise rates, I was saying they have to raise rates. They need to get foreigners to buy treasuries. One of the ways you can do it is by offering a rate of return. The other central banks don't do it. But you can see now we're starting to increase the amount of treasuries that the People's Bank of China holds. This is through March. As I mentioned, I expect that number to be closer to around here, about 1,100, over 1,100 when we next report, which will be later this month, in June 20th approximately, and we'll get April's numbers, and then in July we'll get May numbers, and so on. Here's what I want to show you now. This has been, I'm going to do a little bragging here because I never do it, but I noted in the summer of 2015, right here, this is, watch this. This is June 2015. The Fed will raise rates. This is a period of time when you had many commentators going on and on about the Fed could never raise rates. They won't raise rates. And then after they did raise rates, insisted they were correct in saying they wouldn't raise rates because they only raised them a few times. I said that they would. And here's what I said back in June of 2015. The Fed will raise interest rates on the pretense of a false narrative that the economy is doing well. And then I said they also need to raise rates to boost the dollar and demand for U.S. Treasuries to combat de-dollarization initiatives. The Fed does not want to become the Bank of Japan that buys 100% of the newly issued bonds. They want to create external demand for U.S. Treasuries. The Fed's primary concern is to support the U.S. Treasury. The economy is secondary. Okay. Then when they raise them at the end of 2015. I said that they'd raise them again, but I said they wouldn't raise them 4 times. I said they would talk about raising them, might raise them, and end up raising them because they need to raise them. So here I am in May 2016. Protecting the dollar and demand for U.S. Treasury is more important than the Fed's dual mandate of full employment and price stability. It's also more important than funneling favors to its too-big-to-fail bank shareholders. Without demand for the dollar and treasuries, the proper functioning of the U.S. economy and its deficit-fueled government becomes tenuous. I mentioned that the launch of 2009 is what got de-dollarization, a QE in 2009, is what got de-dollarization started. And the Fed pushed it to the limit, and then when it looked like de-dollarization and a lot of dumping of treasury was happening, the Fed had to reverse course. So the Fed needs to have higher interest rates. They know that, and they're delivering on it. They're delivering as slowly as they possibly can. I never said they would raise rates the 4 times in 2016. I said in fact, at the end of that year, I said that the Fed would raise rates about 1 time in 2016, and that's exactly what they did. I said here, the Fed will continue to push the concept, this is the end of 2015 after they raised them once, to push the concept that they are on a rate hike path, data dependent, of course, because the economy is improving, the job gains will eventually boost consumer spending, blah, blah, blah. Having gained credibility for raising rates, Ms. Yellen and Fed officials will talk about another rate hike for months, sending conflicting signals that they might raise rates, might not raise rates, or might lower rates. However, that's exactly what they did. They raised them in 2016 once, and I said again in 2017 they'll talk about it, but this time they might need to raise them 1 or 2 times. Now, because the dollar has dropped so much, that makes it more likely that the Fed will raise rates. So my concept was that the Fed would raise rates in order to attract diminishing demand for bonds, U.S. Treasuries. Well, it worked. I also noted earlier this year that Trump was making overtures to China for the same reason, to protect the dollar and their buying of treasuries. He's with them on North Korea. He sat down and told them he was bombing Syria over chocolate cake with the president of China. He also didn't label them a currency manipulator, probably in exchange that China continues to buy treasuries. Now, this isn't just China. First of all, Russia is also boosting the U.S. Treasury holdings. Holdings of U.S. Treasury surged to a 28-month high. This isn't just China. When you got bonds on sale, paying an interest rate, and arguably the safest and most liquid bond on the market, then why not buy them? Here, this isn't Bloomberg. This isn't just me. China ready to buy more treasuries as yuan stabilizes. This goes totally against the dumping of treasuries. I've been saying for months, and I've been saying that the Fed's purpose was to reinitiate that demand for U.S. treasuries. They seem to have done it. Trump seems to be helping out. Now Russia and China are adding treasuries. The dumping appears to have stopped. Now, back to gold in China. Plenty of gold in China. Just because the People's Bank of China isn't buying gold doesn't mean there's not tons, literally tons of gold going into China. April, 74 tons imported through Hong Kong. March 2017, 111 tons. None of that found its way to the People's Bank of China. It didn't get into the country. Gold goes into Hong Kong, massive amounts. That's disclosed. We don't even know how much gets into other ports like Shanghai. They don't disclose that. So who knows? There's plenty of gold going into China. Also, China is producing a world-leading amount of gold every year for the last 4 years. Over 400 tons. People's Bank of China doesn't add 400 tons of gold to its reserves every year. Somehow that finds its way into China. It doesn't leave the country, that's for sure. So China certainly has got thousands of tons of gold, far more than the People's Bank of China. Shanghai Gold Exchange, every year for the last, well, now this year it'll be 5 years, over 2,000 tons or near 2,000 tons withdrawn by Shanghai Gold Exchange participants. So retail demand for gold in China is strong. I'm sure it's strong at the Sovereign Wealth Fund. There's just no data on that. Imports are strong. And here's China's gold reserves as it sets up against other foreign central banks. China has what? 1,842 tons of gold. Why do they need to have more showing on their balance sheet? What are they going to do with it? They already have more than Japan, India, and I'm opening up here. China's in the SDR. Well, so is Japan. Well, there you go. China has more gold than Japan. China has a bigger economy than Japan. Why do they need to add gold to the People's Bank of China's balance sheet? England is in the SDR, the pound. You see, they're not even in the top 10. So what purpose does it serve for China to add, or People's Bank of China, to add gold to their reserves? There's your top 10. That about does it. But the point I want people to take away here is that China, or the People's Bank of China, is not on this inexorable drive to collapse the dollar and to dump its treasuries, nor is Russia. Russia is certainly not either. They may be doing de-dollarization, but they're going about it in a very smart manner, and it doesn't mean when you de-dollarize, that you just dump all your treasuries at once and you just buy gold left and right. It's not that simple, and that's why we're not going to see this dollar collapse unless it happens. I think someone was very clever wrote, unless it happens internally. It's through lack of confidence. But externally, countries across the world still need dollars, whether it's petrodollars. Even if they don't need dollars to buy oil from Saudi Arabia, they still need dollars to trade with the US, to trade with Japan, to trade with Europe. All these de-dollarization initiatives. Oh, Russia's trading with Iran. Big deal. How much trade can you do with Kazakhstan, Iran, all on the Silk Road? Maybe one day those will be big powerhouses, but right now, dollar is what's used in the major economic powers of the world. And China and Russia are not stupid. They're not gold bug countries. They're prudent in some respects. Now, China is very imprudent in its debt creation. So China will issue lots of debt. They'll have lots of gold, but they'll also have lots of U.S. treasuries. So will Russia, and so will the rest of the world. So we are seeing an increase. That's the big takeaway in demand for U.S. treasuries. Thanks for listening.